Kirk Duckwall here with your Market Monday real estate stats for the Twin Cities area. Home prices are on the move again. What do I mean by that? We'll get into that in just 1 second. But first, make sure you click on that subscribe button. We know that knowledge is power, and the more knowledge that you have about our marketplace, the more that you can leverage that to your advantage. So again, click on that subscribe button. Let's dive into the data. Showings per week, per listing, median sale price range, Minneapolis and St. Paul area, so that's 200 to 400K. The average number of showings that are taking place in the average listing is 4.14. That's up over the previous week's 2.88, so that was Christmas week there, and then New Year's week up. That's tracking ahead of last year by 25%. So kind of going back to that late November timeframe pace that we had, except for moving even faster as for the total number of showings per listing average. If we look at in comparison to the total showings, it's almost double. So 855 a year ago, 1574 in that price range. So one of the big driving factors here is that there just is not the same amount of homes that are on the market. We're experiencing all-time lows. Looking back 10 years, we have not seen inventory this low. Down to 0.9 months supply of inventory. This is down by over 37% just over last year. So that's basically how long would it take for all the homes to sell in the Twin Cities if no new homes came on to the market? And that's basically saying less than a month. In our peak average times, that's around a 2.7 range year over year. This last year, though, with pandemic, it only peaked out at 2.2. So this really low inventory is keeping that showing pace per listing higher. But then we have the interest rates, and that's putting a lot of buyers into the market. Really unchanged, a slight tick up from 2.66 to 2.7%. So the recommendation from our resident mortgage geek, Chad Prevey, Bell Bank Mortgage. So 30-day closings, holding with that recommendation to lock. Keep floating if you're out longer than that. Thank you again, Chad, for that information. Want to talk a little bit about the market meter. And an interesting data point that I noticed as I started to put together a couple years worth of trends there. So if we look at the sale price, median sale price, I'm going to bring this down to a 1-year timeline, and we compare that to our market meter trend, the two graphs look very, very similar to each other. The difference is what we see in pricing trends. I can look here and it says December down at 309 from 310, so relatively flat, slight drop. If we look at that market meter and I look at December, it ticks up 7.78 over the previous month. Well, if we go back, what we're noticing is a trend line that the market meter, so let's look here, February it went from 7.14 and then by April down to 4.62. Looking back at that graph, it took until April into May to see that same price drop. So what we're noticing is the market meter is predicting pricing trends 30 to 60 days out. So when we see this jump up, and that's exactly what happened from November 6.2, ending December at 7.78, big leap there. Don't be surprised to see those prices jump up. It appears that with large monthly changes, the pricing changes 30 to 60 days out from that, moving in that same direction as the market meter showed. So that said, I see prices moving back up in housing. So we didn't experience really much of any lull there, just basically flat over the November time frame, dropping just $1,000. So for sellers out there with this market meter moving into this range, so 7.78, that's approaching that extreme seller's market range again. So this is a really good time with that historically low inventory to get your home ready, beat the springtime movement, because by then we might start seeing buyer fatigue hitting the market, as I mentioned in the past, and may not have a market that's moving as fast if you wait until the green grass starts going. So yeah, what is it that we say? If you wait until it's green, you're going to miss out on some green. The spring market historically starts January 1st, really picks up after Super Bowl. However, what we're seeing this year is tracking about 30 days ahead of that due to this really low inventory. For buyers out there, you're going to just want to be patient and make sure that you're running the numbers with your agent, looking at what other homes have been selling for, not diving in head first, going way over your head in price or value of what those homes may actually be valued at as inventory starts to pick back up. Hopefully you found this information helpful. I know a little bit longer video. Just wanted to mention real quick that we do have a class coming up, Home Buying Tools, Tactics, and Techniques. That's January 13th online. I'm going to put a link below to that, 6:30 p.m. If it's something you are thinking about making a move, even if it's a second-time move, third-time move, you'll probably find some of that information in there valuable. Take care, be safe, and have a great week.